Hello everybody, welcome to the webinar this afternoon. We'll be doing some technical analysis on the live charts. Before we get going, let's do a quick systems check just to make sure everyone's hearing me clearly and seeing the screen all right. If you would, type OK in the chat box if everything's all right. Okay, I've got enough responses, thank you. Looks like we're up and running. If anyone runs into any issues, just let me know. If the audio goes out on occasion, I've bumped my mute button by accident. So if that happens, let me know in the chat box. All right, so quite a bit of movement on the charts today. Really nice technical trending. It's because we've got a mix of news out there, and so things are bouncing around nice. Some of the major assets that we've been looking at a lot lately, indices, oil, gold, lots of opportunities there with nice technical breakthroughs and bounces. So we'll be taking a look at a number of those through the session today. Now, as we get going, keep in mind, all investments have risk. No matter how confident you are about any one particular move, it's never guaranteed to profit any one particular trade. So you always want to find a way to risk manage in a way that makes sense for you, whether that's using stop losses, hedge positions, calculating your percent exposure, that sort of thing. And we can cover some of that in the session today, as well as we go through some strategy concepts for potential entry points, exit points, stop loss marks, those sorts of things. If you want to read our full risk disclosure statement, it is on AvaTrade's main website. Also keep in mind that what we cover is not meant to be financial advisement. It's coming from an educational perspective to hopefully help you add to your tool chest in terms of your trading tools and knowledge, and improve upon, or if you're brand new to things, build a trading strategy that can get through the bumps in the market, have some flexibility to hang on to positions and hopefully pull a better profit in the end by learning to use some information that we cover. Now, technical analysis in general, for those who are brand new to things, is looking at the candlestick charts is usually what people use. There are line graphs and bar graphs. Good afternoon, MB. But mostly people stick to the candlestick charts for their technical analysis. They're quite useful. And so that's where we'll spend some time on my demo account looking at the live movements. If you see things you like, you certainly can trade on opportunities. If you like the information and you understand what you're doing. In terms of technical analysis itself, there are a couple different ways to utilize it. In the webinars that I do, we tend to lean on the manual methods of technical analysis, meaning finding our own price levels, drawing our own lines, that sort of thing, to find maybe opportunistic entry points, exit points, etc., and use a bit of fundamental news as well to maybe have a preference of which entry points we prefer to trust more than others. Okay, not all support levels or resistance levels are built the same, and they're not all treated the same on different days depending on the fundamental news. Yeah, Mohammed, all the webinars are recorded, so just go to our YouTube channel by Monday. It's typically by the next business day. It should be uploaded and found on our YouTube channel. There's a section specifically for English-based webinars. You'll see another presenter also named Naim. He does some nice presentations as well. All right, so let's go ahead and move forward then. Let's look at the charts. You can ask questions at any time. Give input. It's nice to share information as well. Maybe there's something I'm not covering that maybe you think we should. That's good as well, to go over some things off the cuff even. So let's go ahead. Let's take a look then at some of the fundamental news that's been coming out today. And so it doesn't have to be anything complex. Just a quick look at what are the headlines today, what's happening. And so I always like to look at investing.com just on their main landing page. And you see here quick what the sentiment is. The futures are red. US market didn't open yet. It will be opening soon. There'll be some announcements in less than a half hour as well before the US market opens. The reason I allude to the US market specifically is that's when the highest volume of trading is going, when the European and US markets are overlapping. You get a lot of great technical trending on the charts. And really, even after the European markets open earlier today already, there's been nice trending. So what do we see here? What do you think is happening on the markets? All of this green is from yesterday. Okay, markets finished up yesterday, the major indices. What are the futures doing? And what is this VIX index? The VIX index is up tremendously right now, and the futures are down in red. What does that tell you about sentiment right now? Before you start doing your technical analysis, what's the sentiment, positive or negative right now? Yeah, fear, right? Fear on the markets, negative sentiment. Good, you guys are right on top of that. So it doesn't take long. Quick look before I do my technical analysis. I probably prefer to find, on let's say Australian JPY, I probably prefer to sell rather than buy, because the yen is a safe haven. When there's fear and negative sentiment, the yen tends to strengthen and the Australian tends to weaken if there's any big problems with China especially. And so Australian has reason to weaken, yen has reason to strengthen. Boy, I bet there's nice trending, and I'd like to trust the resistance levels more than the support levels. Okay, that's the idea of doing the quick snapshot of the fundamentals, is so when you start doing your technical analysis, you know maybe which direction you prefer to find opportunistic entry points. So I'd rather sell from high points on AUD JPY today rather than buy from low points, because I trust the resistance levels more when there's negative sentiment than I do the support levels with that pairing. Okay, why is it considered negative? Good question. The futures are red, meaning they're dropping. US market didn't open yet, but their futures market is dropping, it's red. And what's green is the VIX, the fear index. The VIX index is referred to as the volatility index, or kind of a slang term, the fear index. What happens when fear is up? Usually markets tend to be going down, okay? So we see real quick a snapshot. We also see in the headline, US futures lower, trade tensions and weak data eyed. Why trade tensions? Between who? Who do you think there's trade tensions between? Yeah, China, US, and we can see that in other articles. So, and if you read this article, they'll tell you. We can also see it, let's see, headlines. Let's go to Reuters maybe. We go to Reuters, okay. We see an article, if we go to markets, okay. Here, futures fall as China trade war fears add to coronavirus woes. There it is. That's what that other article was talking about. And you could either click and read the article, or I find even headlines are enough to tell me the sentiment, to confirm the sentiment. Type okay if you all, if the audio is okay for you. I have one person saying it's bad. Okay, thanks. I've got enough responses. All right, so Felix, it's just you. If you're hearing me at all, I typed you a message. Okay, so, all right, trade war fears. Why? I don't know if you've heard of this company, Huawei. All right, the US isn't happy with some of their practices. And when the US is cracking down on a company like Huawei, which is a big company for China, that doesn't help negotiations for trade deals necessarily. So it's creating more fear, all right? And so there's also fear about coronavirus spreading as markets are reopening. I shouldn't say markets, as countries are reopening their economies, coming out of quarantine. And so it's a combination. You know, yesterday it was positive sentiment, markets rose because countries are coming out of quarantine, and it's exciting that businesses are opening back up, and that created some positive sentiment, and now it's flipped, right? We can see the headlines. We can see the numbers on the futures are red. We can see the volatility is up. The fear index is up. And so one last thing to keep in mind, what could happen this weekend, the House could pass a $3 trillion additional stimulus bill in the US. The problem is the Senate has already said it's kind of dead on arrival. The Democrat-led House in the US decided to put all kinds of goodies in this quote unquote coronavirus relief bill that has nothing to do with coronavirus or relief, like a wish list of the far left policies, and the Senate is run by the right, and there's no way they will pass that. So it's just a political game. The Democrats are going to pass this through the House. The Senate's going to reject it, and the president already said even if it passed the Senate, it's dead on arrival. He won't sign it. He'll veto it. So this is going to create more tension. There's going to be bickering, but if through the weekend they come to some kind of agreement, okay, we'll eliminate these things and then we'll pass it with this. I don't know how quick that'll happen, but if it gets to where they say, hey, looks like they're going to have a deal, it might not be 3 trillion, maybe it's 2 trillion, whatever the case may be, that could flip sentiment very quickly. So be careful about carrying trades through the weekend on indices, oil, gold, etc. And be careful about pending orders that you open now that are running through the weekend, because you could have big gaps when the market opens Monday. Okay, you could have very big gaps on Monday with this type of news breaking through the weekend. Okay. All right, so Levi, you're asking, how can you see that fear is up? Again, right here. S&P 500 VIX, that's the fear index, quote unquote, volatility index. The higher this is, the more fear there is. It's up over 6%. Okay, it's up over 6%. David, there's no problem with trading currencies through the weekend. You just have to know that you need enough flexibility in your account in case there are some big gaps. Okay, if you're fully leveraging something, you're taking a big chance. If you're opening the largest trade size your balance will let you and then carrying it through the weekend, you could get gapped out pretty quick if it works against you. Obviously, it could work for you as well, but I would be cautious about pending orders through the weekend. The gaps never work for you on pending orders, only against you, just so you know that. Gaps through weekends do not work for you on pending orders. Okay. All right. So let's then take a look at the charts then, since we can see a lot of negative news, negative sentiment. Now, there are some announcements, if we look at the economic calendar, that have come out that were somewhat positive. Maybe not positive, right? They're in green, meaning better than expected, but it's still bad news. You know, negative employment change, negative GDP growth, etc. So even when it's better than expected news, the news was expected to be so bad that it's still not good news. Okay, these green numbers, usually when you see better than expected on announcements like these, you see a huge positive reaction in the markets. Well, better than expected now is not that great when the expectation is really bad because of all the quarantines. The expectation column here is really low. You see forecast, and some numbers came in even worse than expected today. You see all these. The expectation was low and it came in even worse with these numbers. So a mixed bag on those, but overall not great news. The US in 17 minutes has some major announcements coming on retail sales. Okay, this will shake the markets. If these numbers come in anywhere near negative 8.6% or worse on core retail sales in the US, guess what's going to happen to this volatility number? It most likely will go up more and these will turn more red, most likely. Okay, unless it shocks and those numbers come in positive. It's possible, right? So we already have negative sentiment, possibility for large news shaking the markets here in about 15 minutes. Okay, those numbers will be coming in. We'll take a look in a little bit at what those actually show. Okay, so, oh, good. I'm glad it's working on your mobile, Felix. Good. Okay, let's take a look then at some charts. Now, I've got gold here. This is interesting. So yesterday, why did gold rise? Gold has been doing many times the opposite of what it traditionally has done. Indices went up and gold went up, right? Usually when indices are dropping traditionally, that meant bad news and then gold would go up. And opposite, traditionally when the indices were rising, that meant good economic news and gold would go down. Well, it's been a backwards relationship of late because of the coronavirus pandemic. Good news has been seen as a reason to buy gold lately, because then they don't feel afraid to take the cash out of their hands. Gold investors, they feel like, okay, if there's some good news, they still believe recession type numbers are coming, but they believe it's safe enough to take the cash out of their hands. And so with somewhat good news, gold is rising right now. That's been the trend lately. And if the news is bad, people get scared so much again because of the pandemic that they liquidate their gold and they want cash back again. So gold is actually dropping with bad news now. So it's a little bit of bizarro land with gold because of how big this pandemic crisis is. If you think about it, when you invest in a safe haven, it's so that if something really bad happens, you have something to cash in that is of value still. So because the stock market and assets crashed so low, people viewed that as now's the time to cash in my safe haven, rather than thinking I'm going to buy more because it'll go up more. The crisis doesn't get much worse than what it was. And so that was the time that people said, okay, I'm going to liquidate gold. So it's actually with bad news, gold has been dropping. Good news going back up. All right, so with that said, this is a technical webinar, so we really don't have to care why it's going up or down. It can help you pick a direction, certainly. But in the end, I'll show you some technical strategies that it really wouldn't make much of any difference. Okay, so yesterday we can see technical strategy, very simple. What could you have done with gold? Resistance, resistance, resistance. Okay, you knew big news was coming yesterday. There were announcements, there was stuff going on. What kind of pending order could you have put right here to trigger if the price broke this resistance level? What was an easy pending order to trigger? A buy stop, right? Buy stop, buys from a higher point. So had you put a buy stop right at this level where I'm drawing the line above the resistance, after it confirmed that it broke this resistance, it tried 1, 2, 3, 4 times. Once it broke, there's your breakout candle. Buy stop would have been triggered and boom, big profit. Okay, so easy technical strategy. When you know there's huge volatility on the markets, big swings either up or down in volatility, then you can say, okay, I'll find a nice resistance level and support level, and I'll set up buy stop, sell stop, and just wait for the breakthrough, because almost every day there's big news that swings the market one way or another. So a buy stop here, and obviously I could have put a sell stop down here. Here was the support, support, support. Down below the support, I could add a sell stop waiting to sell. The sell stop would still be sitting there. It never broke the support. The news went the other way, gold broke the resistance, boom, buy stops in, and you make a big profit. Okay? I know you might be saying, well, hindsight, that looks easy, but how would we know in advance? We look at this stuff every week. We do these technical strategies every week, and again, these things happen. You don't win every time, right? But you don't need to win every time to end up with a nice P&L at the end of the day, the end of the week, the end of the month. Okay. I'm on 15-minute candles just because it shows the time frame through yesterday and into today very nicely. Okay. And because we're talking a bit about scalping movements right now, we're not looking necessarily at 1 hour, 4 hour, 1 day, 1 week candles. Okay. So good question. Stop loss, take profit. Where would we have put it? So in this example, your buy stop would have been somewhere above the resistance, far enough past these wicks that you're convinced it's a true breakthrough candle. Okay. Then your stop loss would be back below that level. So that if it's a true momentum breakthrough, it shouldn't come back and break below. And if it does, then you get out. Your stop loss is back below that broken resistance, because once it goes above, it should be support at that point. Okay. Jason, I don't know, what setting are you talking about? Can someone help with what setting? Okay, let's take a look. How do you set up? Maybe you're talking about how to do a buy stop. Let's do that. So here's gold. Let me open the order window. I think it's opening on my other screen. I had to switch locations and the windows are flip-flopped on me. Give me a moment. Yeah, there it is. Okay, there's my order window. I'm back. Okay, so what we're seeing then when let me get rid of the CAC. That's not what I want. There's gold. Okay, so how would I do a buy stop? It's very simple. I just go ahead and switch from market execution to pending order, like that. And buy stop means you're buying from a higher point. That is, for this example, when the movement was still down here yesterday, you put your pending order above the resistance, it breaks through, and boom, it buys for you. Okay, at the price you program here to buy, which would have been above the resistance. Okay, so that's how you would have set that up. You would put your stop loss ahead of time if you want, being back below. It enters up here at your at price. Your stop loss might be somewhere down here, back below that broken resistance, which if it's true support, it shouldn't come back below. And your take profit, you program probably at the first resistance level that you might see on the larger candles. So you'd go maybe to 4-hour candles, 1 hour, and you look back in time and you say, okay, where was there resistance? And you'd say, okay, the next resistance level I saw past this level was here. Okay, so right about up here. You see resistance, resistance, resistance. That's where, when this was climbing, it spiked up. It got near there, right here. Got close, got close. That's the first resistance. And look how it predictably stopped climbing. Look how it stopped climbing. So it's very interesting to see that the smaller candles help you find your exact entry point, right? And sometimes you have to look at the larger candles to see, well, where's the next resistance in this example to where I would get out. So the entry point was here. And now your exit point was up here. This was the next resistance level. And look, it predictably stopped right at that location. I'm looking on 4-hour chart right now, Jose, so that I could find the next resistance level. And I was on 15-minute charts to find my exact entry point on a more specific resistance level as it broke through. Okay, so I sometimes refer to that as taking an inside out look. The inside gives you the exact entry point. Then take an outside look with larger candles, and you can see more information about both the entry point and potential exit points. If you would, any questions, try and keep them small, because otherwise I have a long pause trying to read it. Try and be succinct. Okay, so no, that Felix, not necessarily. Felix is asking, if I'm looking at 15-minute candles, does that mean I should be closing my trade within that type of time frame? If I'm looking at 1-hour candles, should I be closing it within an hour? Not necessarily, no. It's there are different reasons and ways you would close trades. Okay, one way is to look, where's the next resistance level, like this example, and you see this is the line I drew on those 4-hour candles. It went back weeks. This was a resistance level back weeks ago, and after this broke, the next resistance level was here, and look where it exactly stopped climbing, right on that exact mark. But it happens too often like that to be a coincidence, right? We see it all the time. Or maybe I shouldn't say all the time, a majority of the time, a lot of the time. Okay. No, there's nothing specific just about 4-hour candles. If I had switched to the 4-hour candles, like I went to 1 hour, I didn't see the next resistance level over here yet on 1-hour candles. So I said, okay, I need to look at a bigger picture. It's been a really long time since it's gotten up this high. So I need to look further back in time to find the next resistance level. So I went to 4-hour candles and there it was. Now I can see far enough back in time that here's the resistance, and look how predictable it was now that that's where the climb paused. Okay, so it's a logical spot that just before that level, that might be a spot you'd take profit to preserve the profit before potentially having it bounce back down off the resistance like it did here during this 4 hours, right? All right, so very good questions. Now we bring ourselves to present time, right? We bring ourselves to present time and we say, okay, great. You showed me an opportunity I could have traded on, and I didn't. Maybe some of you did, but maybe you're saying I didn't trade on that. What can I trade on? What can I do now? So we see a support level formed here, right? Support level. We see a resistance level that we already drew up here that hasn't been broken for weeks, right? Going back, if we go to 4-hour candles, even back in April, this didn't break through this level and stay up. So it's going to take some big news to get above that. Now, we go back and we say, okay, if I'm playing probabilities here, what do I think will happen? Well, the markets are red today. Now, the markets were green yesterday, and what happened to gold? It went up. So maybe logically thinking, if the markets are doing the opposite today, yesterday markets went up and gold went up. Today markets are dropping, they're red, fear is up. What do we think we prefer to do with gold? What's your gut say? What should gold do? And you might say, well, there seems to be a reason for gold to pull back down. Okay, just based on recent precedent. Not that it's going to for sure, but based on recent precedent, it seems that with bad news, gold has been dropping. Why? Because people have been liquidating their gold to get cash in hand because they're scared if markets are crashing. And that's what's been happening of late. Okay, not 100% of the time, but that's been the general trend. So I might say, well, here's another resistance level that formed. If I go to say 5-minute candles, there's a bit of a resistance that formed here on the 5-minute candles, resistance, okay? And we've had a bit of a downtrend, okay? So that's the micro view, zooming in. We go back out and we say, okay, 1-hour candles. If you think gold should pull back down, okay, fine. So you could do a market sell now, right? Market sell from the current price. You could say my stop loss is above this high point. If it breaks that resistance level, remember we looked on 4-hour candles and it goes back weeks, not breaking that resistance. So if it breaks past this resistance after it already tested it once, if it breaks above that, then maybe that's where you say, okay, I'm wrong. Gold's not dropping right now, and you have your stop loss maybe above that resistance. Okay, and where would you say, okay, where would I take profit? Well, here's the first support level. We just drew it. So the support level is, the price is at 35 now. The support level's at around 28. So maybe $1 before that, you could take a scalp profit if it drops. So from 35 to 29, you're talking $6 potential profit, and your stop loss can be maybe only $4 up. So risk reward ratio where the reward is a little bit larger than the risk. Now you might say, nah, I don't like that. I want to be closer to the resistance level. Okay, so don't take a market sell, right? You could say, I want to sell, but I want to wait till it gets up to the resistance. So here it just went. It's coming up towards this resistance here. You could have a pending order. What kind of pending order would sell if it hits this near this resistance? It almost got there. You see how that would have been a better entry point to sell from. What kind of pending order could you program just below the resistance level up here Remember, that's the resistance level we saw in the 4-hour candles. So it's more significant resistance than if it was only there for 10 minutes. This one was not significant. It's only 5-minute candles, right? Sell limit. Good, Felix. So you could program a sell limit if the price hits here to sell. Maybe that's what you prefer to do. Catch a better entry point, but still go in the direction you think it will go through the day. That might have triggered some people's sell limits already, depending how close to the resistance you put it. Came awfully close. Could have got a nice price right up here. So a sell limit could be triggered if it goes up. Here it comes again. Okay. You could do a market sell if it's at the price you want, right? Then you put your stop loss up above the resistance. Okay. There's the 4-hour candles. Here's the resistance level. If you're getting a better entry point up here, right, then your stop loss could be up a bit higher because look, there's a wick right here. You see this wick right there? One candle broke and came back down, and the rest below, 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 below. So an even more patient trader would say, either if I sell now, I'll put my stop loss above this resistance. And if I don't want to risk so much because the stop loss is further up, then just take a smaller trade, right? You take a smaller trade. The retail sales just came in, which is why gold spiked. Ricardo's pointing out the numbers came in. So let's take a look. Let's look at what happened with the retail sales. Remember I said expect volatility. And that's why you want to know when the announcements are coming and time that with when you place your trade, right? If you placed your trade a minute before the announcement and it just spiked up, that could have hit your stop loss, right? If you wait till the announcement's over, then wait for the movement, after you know if the news is good or bad, that might make more sense, right? So now we go back 15-minute. Again, looks like resistance. It hit that spot and dropped. Look how perfect that was. It came up, dropped. Okay. Now let's go and look at what were the retail sales. What happened? So here we are. The numbers came in worse than expected. Oh my gosh, way worse than expected, right? The core retail sales are the big one. The 3 bullhead announcement. It's the high impact announcement. It was expected that retail sales would have dropped 8.6%, which is already really bad. It dropped more than double, or exactly double that, 17.2%. Wow, that's bad news. Okay. Indices have huge pressure down now. Based on recent precedent, gold has reason maybe to drop. I'm always hesitant about that, just because traditionally bad news gold goes up, right? But if you go with recent precedent, if it does the opposite of yesterday, gold should push down potentially. So if you're unsure about gold and you don't like even this entry point up here, I think if you're going to sell, I think it's going to test this entry point, and stop losses need to be beyond that if you want to really give it a chance to not get stopped out before the real move. Yeah, if you're looking at 4-hour candles, Ricardo, it didn't break this wick. You see this wick right here? There's the high point that if it breaks beyond that, the resistance level is completely broken. I think it's headed to that resistance level here. Stop losses above that might make more sense. Okay. And so let's look at the indices. What do you think is happening with major indices? Obvious, right? Look at that. Look what's happening with the indices. So easy moves. Let's go to 1-hour candles. If you find support levels that have been here, here's a support level now that this bounced on. Okay, this was resistance, resistance, support. It hit here and bounced. It tested it. If this breaks this support, you could have a sell stop right down here. Okay, why would I prepare a sell stop and not buy off this support level? Because really bad news just came in for the U.S. markets in particular. So S&P 500. I would trust a broken support right now to trigger a sell stop more than buying up off that support level. It's probably more likely to break the support than to bounce significantly up for very long. Okay. Yeah, there was anticipation of bad news, Kiran. So how would you have known to sell before the announcements? We looked at it before the announcements. Didn't we say before the announcements, look for bad news today, the sentiment's bad, the pressure's down, fear factor was up based on the volatility index, futures were red. We already anticipated that it was dropping even before those numbers came out. Those numbers now solidify your case that maybe you prefer a certain direction, right, with the indices. So the market will continue to move. Perhaps it's going to break this support and trigger a sell stop from somewhere down here. That's an option for a future move now. Okay. Sell stop preparation below this support level on S&P 500. We're looking at Dow Jones. Same thing. Look at it. It looks like the same asset. There's resistance, resistance. It became support, support. I'm not in a big hurry to buy off the support. Not with as bad as those numbers were. You can if you want. I'm not here to tell you what to do. If you want to buy off that support level, you can. That was really bad news, though, that just came in, those retail sales. So, again, a sell stop prepared down here could make sense if you think that the negative movement is not done, okay? And there is fundamental reason maybe to think that. If we look at the volatility index now, it's up over 7%, all right? Right around 7%. Okay, let's go back to the platform. What about oil? It's been interesting, oil. Why has oil been climbing? Anyone have an idea? I have two reasons. Fundamentally speaking, why would oil be climbing through the pandemic fears? Yeah, exactly, Ricardo. China's starting to open back up. US is starting to open back up. Anticipation of increased demand because economies are coming out of quarantine. All right. So the retail sales being bad was expected, right? They were worse than expected, so they may directly affect US companies, as you're seeing with the stocks that were dropping, the indices. But oil's looking at a bigger picture with economies opening back up. And then also, there's a second factor that many oil producing countries now have agreed to production cuts. So those two things in combination have been driving oil prices up. All right. So this is something to keep an eye on. Now, someone's asking about crude oil rollovers. I want to show you something. Let's go to 1-day candles. Look at this resistance level right here. You see this? Resistance, resistance. All right. And let me get rid of the objects I've drawn on here. One second. There we are. Clear the clutter. One moment. Okay. So let's draw back the one line I want you to see. There. Resistance level, right? Look where it stopped climbing just now. Look exactly where that stopped climbing. Right on the resistance. I just had a one-on-one session with someone who was looking to short oil. And I said, well, maybe we look at a bigger time frame. And we looked at 1-day candles. And I said, before you sell, it was maybe looking to sell earlier. I said, look at these 1-day candles. It looked like it was trying to climb to that resistance level earlier today. And there it is. It just made it. Okay. That's a pretty major resistance level. If it breaks it, a buy stop above that resistance level could ride itself to the next resistance on the 1-day candles is this big gap. That's a major price level. That gap, if the price hits here, that's where I'd be taking profit probably. If this breaks through this resistance, a buy stop gets in, it could climb rapidly to 35-ish, right? No guarantee, but that's what the price levels are showing. Major price levels. So a buy stop up here if it breaks through, and currently it did not break through. It's got a double top. There's that line. You see the red line? That's the one I just drew on the 1-day candles. All right. It did not break it. So you could, with that really bad news that just came in, right, on retail sales, say, okay, maybe temporarily, once it gets closer to this resistance level, maybe oil pulls back. So you could do both. You don't have to guess which one's going to happen. It's limited risk. Look how close you are to this resistance level. You could even take a market sell, okay? Or a pending order closer. That's up to you. If you wait till it gets too close and it drops as it's close, but it doesn't hit your mark, you might miss it, right? So in any event, if you think that resistance level could hold, especially with the bad retail sales, you could sell and put your stop loss above this resistance level, right? It's a small risk. Look how close it is to the resistance level, okay? That's one option. So you could do market move, sell, right? Then, and by the way, just because I did that doesn't mean you need to, right? But you could if you like the setup. 1-day candle, okay, it's below it, I sold. Where would I maybe want to take profit and stop loss? Okay, so I want my stop loss, let's go back to 1-hour candles, above the resistance, maybe at 30, just above 30, it's a round number, right? I'm gonna do 30.25 or 30.3. So I'll risk a couple dollars. So modify or delete, stop loss, 30.3. Okay, and take profit. Where's my first support level? Right down here. Okay, this is the new support right down here. So somewhere before that, maybe at 28 or 27.9. Okay, and done. Okay, so now I've updated my take profit. You see, is it at the next support level down, the first support level, and my stop loss, if I have to go the 1-day candles, is above this breakthrough level. And at the same time, I could program a buy stop to enter at that price, right? I could set up a pending order buy stop to enter above this price. Okay, you see this here. Aruna, that might be a good entry if you think gold should pull back down. Gold took a spike up. It went to that wick, didn't it? Let's go back and look. Let's go back and look. So anyways, before I leave oil, you could put a pending buy stop just at the same spot that you would give up on the market sell, as an example, as a 1-2 move. If it hits your stop loss by breaking the resistance going up, then now that's the same reason you might trust buying, because now it broke the resistance, if that makes sense. Let's look back at gold. And you see the wick? Let me show you. There's the wick. Remember we said the wick here? If you're going to sell, you might wait till it's closer to the wick and have your stop loss above it. Okay? So stop loss above the wick here, and you could potentially sell on that. Okay? Now, some ideas about selling in an uptrend are, it's at the resistance, but now we go off the 1-day candles and you say, now I want to see a downtrend start. So it's still an uptrend, right? So you know it's just below a major resistance level. We saw that on the 1-day candles just now, the 4-hour candles. So now you just say, okay, as long as it doesn't break past that red line I just drew, if it consolidates and starts to downtrend, 5-minute candles start to go sideways, start to drop, then that's your cue maybe to get in. that a downtrend starts. So it's great that it's close to the resistance and you say, okay, now I should sell. But you might be more patient. Wait to make sure it doesn't just break right through. Wait for it to flatten, go sideways, and start a downtrend. Many times that helps you avoid getting in on something that is going to break the resistance. Okay? So on the smaller candles, let's go back, bigger candles, I find the high resistance point. Smaller, it's not there yet, it's getting close. Smaller candles, I say, let me see if it starts to downtrend a little before I get in. Okay? And yeah, that's the line we drew, Aruna. You're saying 1746, there is resistance. Correct. That's the line we just drew here, right? The first line, 1746.60, I drew it. Up here's the second line is where I said maybe you have a buy stop or a stop loss. Okay? If it breaks that high. This looks like a decent spot. If it starts to show, you see it as a double top now. The momentum is slowed. Double top. If we go 1 minute candles, it's not running as smoothly. You might wait and see if the peak on this one, if the next peak gets lower and the next peak gets lower, then that indicates a downtrend. Then you could get in, put your stop loss above that big resistance that we see here. And here on the 1 day candles, stop loss somewhere up here, and market sell if you deem that you see a downtrend starting, which looks like it might be. Okay, very interesting look there. And again, it's so predictable where these big movements are going to at least pause. It was within $1.50, $2 of a major resistance level, and look what happened. That momentum, boom, stopped like it hit a wall. Okay. Now, if it does what it's been doing the past month, if the markets are dropping, gold has the potential for a large pullback right now. Okay. Where's the next support level? Down here. 1721. We're talking $20 down right now to the next support level. All right. Huge potential with small risk to put your stop loss above that. To put your stop loss above that resistance levels, a fifth of the distance to the next support level down. Okay, very nice setup. I'm glad we saw that while it happened live to approach a major resistance level. And remember, it's this wick. It's this wick right here. That's where it paused. I think it's going to test it a little bit more before it makes a move. It might break through, it might drop. You can be prepared for both, right? And they're great entry points now, because that's a resistance level that's been there for a long time. Okay, so let's see what crude oil is doing. It's still respecting the resistance. Remember, I put my stop loss up here. Here's my resistance level here. It's respecting it so far. Okay, I'll let that trade run a while and look at it maybe next week. Although I don't think I'll let it run through the weekend, to tell you the truth. I think it could gap. Being on a demo account, I don't mind. I could let it run through the weekend, but you want to use your demo account if you're on one, the same as you would a live account. Don't take chances you wouldn't otherwise take. So I think this, for me, this would be a move. I get out before the end of day today if it gets into a profit I like. Okay. I don't want to carry my gold or my crude oil through the weekend necessarily. Any questions at this point before we end things? We've been going for quite a while. Yeah, we can look at the DAX. Why not? I bet it's doing similar things to the US indices, dropping, right? Downward pressure, testing support levels. Downward pressure, testing support levels. That's what we're seeing. It was predictable. We knew that. Go back 5, 10, 15, 20 minutes ago. Sell from the resistance. Resistance, it came back up. Sell from the resistance, right? Why? Because bad news today. Bad news today. Easy moves. End of day is 5 p.m. New York time. 5 p.m. New York time is end of trading day. Okay? Markets are open a little past that. Understand. Markets are open closer to midnight, in some regions. Depends what region you're in. But 5 p.m. New York time, and then it goes another hour or so before the markets actually all close in terms of the CFDs, the retail trading. Yeah, exactly. It carries on a little bit past market close, but then you're paying swaps, right? Past 5 p.m. New York time, you're paying swaps because that's the technical end of day, even though there's still trading after that. Okay. All right, everybody. Thank you for attending. It's been a nice session. Lots of good questions. I wish we had time to look at more stuff. Natural gas will probably move similar to oil. Okay. Natural gas will probably move similar to oil. We see oil is topping out near a resistance level. You got to make a decision on that, right? If it starts a downtrend, this is not downtrending yet, right? This is not downtrending, but if it starts to downtrend, that might be the time you choose to get in if you think oil should pull back. Okay. All right, everybody. Set your pending orders above and below support resistance levels. Get yourself in and ready to go. But be careful carrying those pending orders through the weekend. Okay. That's definitely something that is risky. You might close off any pending orders that haven't opened, a few hours before the end of the trading today. All right, everybody. Thank you. Bye for now.